I'm Matt Bouchard at the Hay Adams Hotel in Washington, D.C. for NAREIT's 2017 Washington Leadership Forum. Joining me today is Phil Hawkins, the President and CEO of DCT Industrial Trust. Phil, thanks so much for joining us.
Thanks for having me.
So DCT's development program continues to greatly exceed expectations. What are some of the reasons that it's done so well?
It is going well. I'd start with the market. The demand for distribution space is very strong. Broad amongst size ranges, markets. It's going very well. And then supply is disciplined. So as a result, rents are growing and lease-ups are faster. Beyond the market, I've got to give credit to our market teams. You know, it's still a local business. Development in particular is a local business. And the ability of our market teams to assemble sites that are in phenomenal infill locations and then execute on the leasing. I mean, you still have to work in this environment. It's a good environment, but you still have to compete and compete hard. And our teams are there, like I say, assembling the right sites, building the right buildings, and then focusing aggressively on leasing them. And the rates, as a result, rates have been better than we expected. Lease-up time faster. That's what the results in the returns we've been generating.
Now, of course, development's only one side of DCT's story. Acquisitions is another big factor, and your company said that you'll make up to $100 million in acquisitions this year. What sorts of properties and markets are you considering?
Well, first I'd start with this prioritization. Acquisitions are not a big priority for us. Development, given the value we can create, as well as our own operating portfolio where we can, by focusing our efforts, push rents, grow NOI. Those are our two first priorities. But then our market teams are in the markets, and they will find some assets. They'll be compatible with their existing portfolio. They'll absolutely be in markets we're already in. They're assets we're going to like. We better like them a lot, given pricing. And then I'd say there's got to be some opportunity for either near-term or longer-term cash flow growth that is above the average of our current portfolio. If it's not doing that, we're not doing much. And I'd rather spend our time focusing on better opportunities in development and our current assets.
Now, of course, you started by saying how strong the industrial market is. So anytime a market's strong, that's going to bring interest into it. Are you seeing a lot of new players in the industrial space, either on the development side or the investment side?
You know, development remains a business that requires a lot of expertise. So certainly on the execution side, the developers themselves, very few new players, all skilled, very good at what they do, which has helped lead to, in some ways, the discipline that we're seeing in terms of starts as well as leasing. On the capital side, a lot of them are familiar to the development business. Again, it's a risk in a business that you need to have a good understanding of the industrial business to begin with. But you do see some new capital sources from time to time, both foreign and domestic. And then in terms of acquisitions, there clearly have been new players over the last 3 or 4 or 5 years. Again, foreign and domestic. The bulk of the kind of small to medium-sized portfolios are bought by traditional players, U.S. pension funds and pension fund advisors, REITs, private funds, etc. Larger portfolios, that's where you've seen some new entrants, and I suspect that will remain the case. Again, the U.S. and U.S. industrial have not been a secret. And that's attracted capital of all types and sizes, and both foreign and domestic. So I think that it seems as if the capital sources will remain fairly broad and fairly deep. There doesn't seem to be any impact, for example, very little impact since the election. But only time will tell. It's still a little early to make that statement.
Well, Phil, thank you so much for joining us.
Hey, thanks for having me.
For more REIT news and analysis, be sure to visit REIT.com.